Leading cryptocurrencies are getting ready for a big month. Bitcoin is losing steam because the central bank is raising interest rates again, and Ethereum is getting ready for one of the biggest software upgrades in history, which has been delayed for years. Will the merge be beneficial for all? How is it testing the nerves of traders? This and much more in today's video. Ethereum merge tests crypto traders' nerves. Bitcoin dropped over the weekend after a strong U.S. unemployment report sparked worries that the Federal Reserve has no reason to slow down on rate hikes because of how strong the job market is. On Sunday, the largest cryptocurrency traded for less than $20,000 US for the 9th day in a row. Monday afternoon, prices stayed about the same at $19,891. Richard Galvin of Digital Asset Capital Management said that the macroeconomic outlook has as much to do with price drops as the merge of the Ethereum blockchain, which is expected to happen in the middle of September as traders prepare for the migration. Ether, the currency traded on the Ethereum blockchain, has lost about 55% of its value this year, but it is up about 60% from the low point in June, when it was worth less than $1,000 US. On Monday, it was worth $1,578. The exchange rate between Ethereum and Bitcoin has changed a lot in the past few months, Mr. Galvin said. From our point of view, the strong story around the merger is what has caused more money to flow into Ethereum than into Bitcoin. At the middle of June, one Ethereum was worth about 0.049 Bitcoins. Today, it has gone up to 0.079 because the price of Bitcoin has dropped to around $19,500, Mr. Galvin said. The crypto evangelist also thinks that rising interest rate expectations are bad for Bitcoin and the cryptocurrency market as a whole. He says that this is the first time in the 5 years that the fund has been running that the asset class has been so closely linked to macro trends. We're seeing a correlation that's way too high with big events, he said. If you look back at CPI announcements and other things that have shocked the Nasdaq in either direction have usually affected crypto over the past few months. Let's now talk about the merger itself. Along with the market losing more than half of its value since November, meltdowns like those of the Terra ecosystem and the hedge fund Three Arrows Capital have also made investors feel bad. The team behind the $200 billion cryptocurrency Ethereum has set a date for the long-awaited merge, which will allow holders of its native cryptocurrency token to earn yield for helping to validate the network. This has brought back interest in Ethereum. The software update completely changes how the Ethereum blockchain works. Instead of a proof-of-work model, it will now use a proof-of-stake model, which uses a lot less energy. By cutting down on the need for computer power, the upgrade is expected to cut 99.95% of Ethereum's energy use. Mr. Galvin said that asset holders like himself would see two benefits from the migration: a decrease in price erosion and validation from transactions. Every year, miners get about $4.93 million worth of Ethereum, which is worth $8 billion. This means that I lose value, he said. The price will stay the same if you bring in $8 billion more. Miners have high fixed costs, so they need to sell to pay for them. This puts pressure on the market to sell, which needs to be met with pressure to buy. In proof of stake, the number of coins issued drops from about $5 billion to about $0.6 billion. The other difference is that instead of giving that Ethereum to miners, it can be given to me as a staker, which means I can take part in the inflation. Ray Brown of CoinSpot said that users of the cryptocurrency exchange have high hopes that the merger will have a positive effect on prices. Traders are betting that the merger will attract more developers and investors to the cryptocurrency. There are many things we don't know about the Ethereum merge, which will happen between September 10th and September 20th. Some people have compared it to the Y2K scare. As a precaution, Coinbase Global, the biggest cryptocurrency exchange in the US, will stop withdrawals and deposits of all Ethereum-based tokens. Mr. Galvin said that there are risks when such a big change is made, but he wasn't worried. He also said that because of the risks, the benefits of the upgrade are not priced in. In related news, Ethereum's plunge protection squad can't fight the Fed. This weekend, the idea that cryptocurrencies are a good way to protect against inflation fell apart even more as speculators ran for the safety of cash after U.S. Federal Reserve Chairman Jerome Powell gave a speech in Jackson Hole in which he said interest rates will keep going up. Promoters of cryptocurrencies won't want to admit that their world is tied to the U.S. dollar and held hostage by the Fed because that would kind of defeat the whole point of the asset class. But the price action suggests that as Powell's hawkish speech took up to 15% or $70 billion $102 billion, off the value of both Bitcoin and Ethereum in 48 hours. The falls are bad news for Ethereum's plunge protection squad, which is made up of insiders, social media promoters, developers, and people with vested financial interests. All of these people have been pushing Ethereum as a way to escape the madness of central banks. The plunge protection squad, which is a modern version of President Reagan's Working Group on Financial Markets, is now counting on the Ethereum merge on September 15th to send prices back up. The merge will change how Ethereum works, and in typical crypto hyperbole, the media has said it could save the world, change cryptocurrency forever, lead to everyone using Ethereum, and create new peer-to-peer financial systems. systems. The team has to ignore the logical conclusion that Ethereum's transaction times, energy use, and fees are terrible because of the way its proof-of-work system works now. Moving on, PayPal resolute on innovating with crypto. When PayPal let people in the US and UK buy Bitcoin or accept it as payment, it became one of the most well-known examples of major financial institutions promoting cryptocurrency. This helped push the price of Bitcoin to its all-time high in November, which was a record for the currency. But since then, the value of the global crypto market has dropped by $2 trillion $2.9 trillion, and many Bitcoin investors have lost a lot of money. PayPal is still very committed to crypto, though. There is real interest in up and down movements on any given day, says Edwin Aoki, PayPal's chief technology officer for blockchain, crypto, and digital currencies, who was in Sydney from his home in California. But we are in this for the long haul, and we see this as a way to spur innovation in financial services. Some of its users still bet on its day-to-day volatility, but the payment giant wants to do more to educate consumers, is thinking about how to let stablecoins be used to make payments on its network, and thinks that the real game in the polarizing space is to improve financial infrastructure. As the speculative frenzy dies down, the price of Bitcoin has dropped 50% in the past 6 months, including a 15% drop in the past 2 weeks. Mr. Aoki says that it is still very early days for the technology, which came into being just 12 years ago, but he is sure that it will have benefits in the long run, like programmable money and atomic settlement, which will make it possible to trade ownership of assets and payments at the same time and instantly. Finally, crypto exchange boss refuses to resign after $73 million loss. Marcus Lim, the founder of ZipMex, has said that he will keep running the troubled cryptocurrency exchange unless its new major shareholders tell him to step down. In the meantime, he is working to pay back the $50 million $72.8 million he lost when Babel Finance and Celsius Network went out of business. Mr. Lim stopped withdrawals and transfers last month after it became clear that the millions of dollars lost had made a hole in the company's balance sheet. This made it harder for ZipMex to pay investors the 10% yield promised through its ZipUp Plus product. Last week, Singapore's High Court gave ZipMex 3 months of protection from creditors. This gave the Australian-based exchange time to raise between $50 million and $80 million in new capital and return money to investors. Mr. Lim told the Australian Financial Review from Singapore that he planned to keep his job as CEO and work on a plan to restructure the company so that the roughly 25,000 customers who lost money would get their money back in full. Mr. Lim said this plan could include bringing in new majority shareholders who may want a bigger say in management decisions. If this happens, my co-founder, Akalarp Yimwilai, and I have made it clear that we will do whatever they want if they want a change in management, he said. The future of Mr. Lim's job was called into question when it was said that a minority shareholder had sent an email asking Mr. Lim to step down. But the Financial Review has heard that none of the 40 investors at an extraordinary general meeting in Singapore last Thursday asked Mr. Lim or any of his management team to step down. That's all for today, guys. Hope you enjoyed the show. For more crypto-related news, subscribe to the channel. Till next time, cheers.